Gracious good morning and greeting Galaxy Universe. This is a recap of your first decision. This is Coach T, Professor Tommy Halstead, and I'm going to give you as fast as possible, a recap of the differences between what we inherited as a universe and the three decisions rounds that were made by red, blue, and yellow teams. We'll start showing some standings and then we'll talk about what actually happened. The first decision really is just ready, fire, aim because there's no competitive information. It's only what you can study on the videos. And we don't have really a feel for how lost orders over inventory nor supply and demand actually drive EBIT. Now we do. For the rest of the next three decisions, decision five is very different, but two, three, and four are very important because we'll be looking at our competitors and we'll be looking at our customers. You'll see the difference between individual decisions and the portfolio strategy also right away. In a second here, I'm going to share my screen, but on the standings, all three teams very unusually are basically tied. There's a big difference in standings because they're tied, the ties are broken and forced by the weightings given to retained earnings, EBIT, stock price, and especially we'll say return on capital employed. So you'll see there's a big difference there, but there's only one small change that was not made by red team that was made by yellow team that made a lot of difference in the standings. But when you look at the numbers, everybody's in a dead heat because the portfolio choices are different. So let's share the screen. You'll see some edits thrown in here. So there's videos that I'm not showing, so there will be some visuals dropped in, but I'll try to show as much on full screen on screen sharing as I can. Okay, to begin with, here's our rankings for decision one. And you'll see there'll be all kinds of indicators. You can take screenshots of these. I will show a lot of things that are just for screenshots. I'm not going to dwell a lot of time because you'll need to put them in your final presentations later. So part of these recaps are not just for the next decision and recap of the previous, but most importantly for your final presentations. The course is heavily point weighted toward the end, and you need to take screenshots of these and some of the other sliders and things, decisions you made between the teams. And so I'll just go through these one at a time so you can take pictures of them. The standings look hugely different, which with yellow taking it by a mile, blue in the between, and red losing greatly. That's not the case at all. Well, you look at the numbers, you'll see that they're very closely tied. But there's one thing that's happened in this sim that has never happened before, which is that revenue is tied between yellow and red teams. If you look at sales revenue, this has never happened before because it forces a tie, unless it's down to this penny. You started with what, 17,770, and it's at what, 18,430 now. But whatever it is to the penny, and they could not force a tie. So both came in number two in revenue, which is an important driver. And then of course, EBIT is the second, which is the whole chart that we will see in a second. But when you look at this and take a picture and say what's going on here, these are just the standings. And obviously, if you have six indicators and three teams, the worst you can do is 18 points. You come in 3 times 6, which would be, and we're at 16 on red. The best you could come in would be 6, which is 6 times 1, and we're at 9 with yellow. So these are all forced rankings. If you start to look at the financials, you'll see they're almost identical. A lot of teams didn't make many big changes, but where people try to make investments or are not careful in low cost and eco, they get destroyed. And we warn about this all the time through the whole sim. Be careful of low cost and eco. If you do nothing, you're killed. You can't reduce that inventory, but if you do too much, you're killed even worse on EBIT. So we'll see how that worked out with lost orders of over inventory. So I'm not going to dwell on those standings because they're so tied, but let's jump to the faculty report right away. Here's the differences between what we inherited and what our decisions were. You can just see at a glance what happened to the teams. And this is where everyone can be tied, but have very different strategies. Red is identical, basically, in eco. They made no changes there. And yellow especially did much better, and blue did better. So we can look at the strategy, what happens with those two teams and what did they do differently in eco. But eco is very much related to lost orders over inventory because you're starting with such high inventories there, as Red Team noted in their discussions, which we also posted. Now, also the low cost kills you. Two teams fix that. Red is almost the same. They fixed it a little, but not quite. If you can see the differences there, our two flagships where we make all of our money right now in the first couple of decisions are obviously family and image. Family, everybody got a really strong start, and everybody did a little bit worse. Blue did a little worse than the other two teams. And again, red and yellow are very closely tied, and this is because revenues are close, but this is EBIT here. So it's profitability. It's not just what did you invest. Everyone did fantastic with cash. At this time on the second decision, we have people getting loans, burning through all their cash. Everyone was conservative, did great on their cash, but everybody did too well on their cash because there's so much cash left that should have been put into marketing and engineering that you've got 6,000 you'll see on the corporate report left in cash. If you build a flywheel and you're making a lot of money, you don't want a lot of cash and you do want more leverage. Everybody's sitting at 33 some percent in leverage, which is great. Someone who wins the sim and has bars all over the top on EBIT may have 50 or 60% financial leverage and huge operating leverage. Our operating leverage is about the same. We'll see that in lost orders, but you have to learn operating fixed versus variable cost very quickly in the sim, or you'll never get the EBIT straight because every dollar of revenue will not be a dollar of profit. So again, you can see what happened here. Um, Image could be way up here as much as it is down here, and red and yellow did great. Blue lost a little image, so all three teams have to focus a little more on image, a little more on family. Red needs to figure out what happened in terms of stopping the bleeding in eco, especially on inventory, and also low cost. Both of these are usually low. It's surprising that blue and yellow both jumped into positive EBIT territory. First decision on low cost. That rarely happens, but some people have just say, we're going to be a low cost company. We're going to do everything there, forget everything else, and by decision 5, they win. But someone can also be in last place, 1, 2, 3, and 4, and win in 5. So this is not an easily decoded simulation. It's very much like real life with a lot of moving parts. Okay, looking at the numbers, here's what absolutely never happens. 18,590, 18,590. This is why there's a tie for second. Yellow and red both killed it in revenue, but blue is really close. Look at that. They're just a tiny bit above. What happened in EBIT? This is where red got killed. They're two, two teams both jumped into positive territory on EBIT, which is also very unusual, especially to have this much with yellow, very profitable for a first decision. And yet, red got killed, obviously, in EBIT in by just staying the same in the two bleeders, which are low cost and eco. And that there's a lot of videos and a lot of pre-onboardings and stuff that will that sort of warn everybody, but you can't really get it until you try it. So everyone knows that and sees that. If you take a look at, let's see, where's Rosé at? Rosé is usually not positive yet. It is. Yellow became positive already in Rosé. So they made some really good financial decisions. The sim is heavily weighted. You know, there are 6 indicators, but they're heavily weighted towards the financial side, as all businesses are, like revenue, EBIT, share price. There's more weights to that. And you can see why yellow, even though they're tied closely in the financials by numbers, if you look at quality and HR, the same. Look at the, let's see, morale. There's a little difference there. Yeah, there's a little more investment by these two teams than in red in morale. And also, you can see an emissions play being made by blue with consumption, but consumption is also very hard on EBIT, even though they did well on, they were in the positive on EBIT, just not only because they did good, blue did stayed good, stopped the bleeding here, and really stopped the bleeding here. So blue and red are both contenders, obviously, for the first place. So you can see what consumption is expensive. When you're increasing consumption, you're decreasing, you're increasing mileage, miles per gallon. So it's a good thing, but it's very expensive CapEx wise. Let's jump over to, before we go into the individual car lines and look at our decisions and our sliders, let's take a look at lost orders over inventory compared to the effect it has on EBIT. This is the key indicator in the entire sim. You need to take a screenshot because it would take forever to calculate this yourself. And a lot of classes make their universes do all these calculations. We don't have enough time to do that, so I'm giving you all these screenshots. This is absolutely the key driver of EBIT. And the way it works is it's lost overs over inventory, which means on a graph, because of indexing to 1 and indexing to 0, it flips the graph. So the top above 0 here is inventory and the bottom is lost orders. So if you're building inventory, that means that your comparative of supply and demand is that you have a lot of supply and not enough demand. Down here, you have a lot of demand and not a lot of supply. So down here in lost orders, you're doing a lot of good marketing, trying to sell low cost, doing a great job on your sliders, but your production's off. You're not making enough of them, and you're losing all that money because you're spending the money on marketing, but the production budget is not right. The demand happens. You have a ton of sales. You have a ton of, I'm sorry, you have a ton of orders, but not enough sales down here. You have a ton of sales, but not enough orders up here. So what when I say sales and orders in the US, deliveries are sales. That's how accounting wise. So whenever you see sales here, you're thinking deliveries. Okay. So if you have a lot of orders and not a lot of deliveries, you're losing every dime you put into marketing because you're going to the dealership and saying, I love that new Kia Seltos. It's beautiful. It's taken a place of 300 cars. It's 20 grand instead of 50 grand like the other small ones. I'm really interested. I really want one. Sorry, we don't have any. And we won't have any for 6 months. Okay, there you go. You got, and we actually booked the orders in this period. So you got that revenue coming in, but you can't fulfill the revenue. So what you're trying to do is stay as close to this zero line as possible. And these are linear, but you'll see curves later on when we have decisions 3, 4, and 5, as I showed you in the onboarding video. If you watch the onboarding video, this was actually the heart of it. And I just tell anybody, you're going to see this. Well, yellow, and look at yellow, did a great job. And you can cycle back and forth. We can cycle back and forth between this and seeing what happened in down here. So you can see when we're in low cost, how come red really had a huge amount of inventories, the other didn't do too bad? Well, that's again just showing us the difference between on the lost order inventory, what happened in losing these orders or building a lot of inventory. Either one you get killed on, but it's better to build a little inventory and be closer to the zero line. So the further you are down here from zero, the worse off you are in terms of EBIT. So actually, if you look at blue team in low cost and yellow team, and you take a zero and you go like through here, see, they're both very close to zero, closer to zero, the worse than red is, but it doesn't matter if you build some inventory, if you have some lost orders, the closer you get to zero, I have no inventory and I have no lost orders, your supply meets your demand. You've done great on marketing, you've built a flywheel, but you've built enough that you need. So let's jump to family and we'll see how everybody did. The zero line is going to be way down here on family because everybody had a huge amount of inventory. And we've got a tie basically with yellow there. So let's look. What's happening with family is that yellow and red and yellow didn't make a lot of changes here in family, and so they've got the similar line. They're not too far off. I don't think we even probably got down to zero here because there's so much inventory. There always is in family because it's got to be made. So we're basically doing great marketing. We know family's going to be profitable, but blue team, let's jump back and look at blue team and family. I can do it. There's blue team and family should probably be a little worse than the other teams. Here's family. Okay. All right. Yeah. So you can see blue team took a little hit in family. Other two are either above or below, not doing too well. But again, this just shows how great a predictor is. You can say, hey, what's going on with blue there compared to what's happening with blue here with all the build of inventory. So these two are very close to tied because they're superimposed. They both have some inventory build, but not as much as blue did, meaning let's make a ton of these, but not market enough. So that's the opposite of building eco. Everybody gets killed at. Who got killed the worst in eco was red. Where's the zero line? Now, where's zeros? Are they almost at the zero line? Actually, see, red is not too bad here in terms of the zero line. But what happened with eco is that there was not any change. If you can look at the where the loss over inventory were lowering the trend or raising the trend, um, if the trend went a little up or a little down, and you met the supply and demand, but you did not have a flywheel, you didn't push the both at the same time. If you did not hit both at the same time, you're going to stay the same. And so you have to hit revenue, and you have to also match it to this. So it's what happened is Red did a great job of eco of balancing their supply and demand. However, they didn't build a flywheel around it saying, let's increase both. So that's part of the portfolio strategy, which you can't be everything to everyone. And let me see if I can find this. Look at this again. This is where we're starting to separate into portfolios. Some teams basically in decision two or three, and you'll be very different on your strategy. People will say, hey, let's wink and nod. We won't text each other as teams. We can't do that, antitrust. But why don't you take image, I'll take family, and let's see what we do. We won't kill ourselves on price. I'm going to raise my price a little, but everybody else, you go play somewhere else. And if you start building market share, you'll see market share is everything as you get match supply and demand. Once you get more share, you're going to get way, way more profitable sales, and then you can hit the revenue gas pedal. So you can see that already that Yellow's got a portfolio strategy going right now where if they just do a little more fixing in eco, they're positive all across the board. Now, the key to this, the next decision is what's going to happen in image. Everybody has a huge amount of opportunity up here in image and lost a lot of opportunity in family. So we'll look at the sliders and see what happened in marketing there and in engineering because that's what drives that. But let's jump back to the last two here. Let's take a note on image. Everybody did state about the same in image, so let's see how that translated. Oh, could we have another? Red and yellow are so tied in the sim, it's funny, but it's not funny. But actually, here's your zero line, and we're back here, and I'd say the teams are fairly close on lost orders over inventory, whereas red and yellow again have started out with inventory increased a little bit, but blue and image didn't do as well because they had a lot of lost orders. They made a bet, which was smart on Blue's part. They made a bet on image you should, but then you have to produce enough also. So let's go back to this. And yes, so everybody had an equal opportunity to do that. Blue lost just a little bit, but nobody did terrible. Look how close we are to where we started point. Of course, the challenge is not to be where you started, is to see how if we can make it any better, because we inherited a losing company here. It was Walmart buying Sam's Club, destined to go under because it was such a major turnaround. Who's ever going to turn it around? We've talked to the sim people at Harvard. We said, why don't you make this easier? They're like, no, the real world is recessions, uncertainty, disruption, and a whole bunch of problems. So that's what you're going to have to solve here. So, and everybody does it by the end of the sim does fantastically. At this stage of the capstone class, that's sort of understandable. Let's jump back to right here. We have a red team slider, and we have the famous, soon to be famous, white line. If you remember the onboarding where we went through the end of the sim and showed how the sliders worked, the white line is your customer, what they want. The blue line, forget the light blue line. Nobody messes around with perception. You don't have to in the sim. We don't have time. But again, this is not a time series, as we mentioned in the onboarding, if you've watched the onboarding. These are your factors up and down across here in terms of performance, where it's comfort, um, novelty is important. But so this is obviously for low cost, right? Yeah, this is for low cost. So we know what happened in all three of them in low cost and how well did everybody match what the customer wanted. Now, they're not leading or these are not leading or lagging indicators. You can't say, okay, what's my trend? They're mostly the differences between each where you underinvested or overinvested. And the white line will change somewhat as you invest, because if you put a lot more into image, and let's say you say, well, in image, as we jump to image, we're going to see that certain things are much higher and more important than they were, and it's easier to match demand on these areas. But if you don't make a lot of changes, which they didn't do here, you're not actually trying to build a franchise in image. So you go back to low cost and say, we're trying to build, we're investing, or we're not investing. And that was obviously in all three teams in terms of not wanting to take a big chance in image, even though it was a real big potential. We'll look at eco and say, uh-oh, what happened here? But simply, there's an overinvestment here in the first in performance design, and comfort. Comfort isn't as bad because, in low cost, performance and design are really big in image, but they're not that big. And all of us cheat sheets show you what happens to this and how it works. Let me get rid of this block here. And then same thing in, what is this? Is this, yes, where's robustness? Let me find robustness down here. Does that say the same or a little less? Oh yeah, low cost wants more robustness, and this is just something you learn as you go along. And technology is something they don't care as much about, whereas technology size is important. Size is perfect, they hit size right. And so I'm not going to go through these commentaries each. I just want you each to know that these are the gaps in between you look at, not as much as the trends. And that'll just help you adjust your sliders also for your Annex 1, 2, and 3 on strategy. These are screenshots you can take. But I do recommend you taking screenshots of the white lines. You'll never see them again. You can't get back in the sim and see them. And this will help you with your final reports, because you'll say, here's how we were mismatching, and look by the end of the sim how closely we came. Marketing is usually no big deal because it's always the same at the front. You don't know anything about marketing really until you see your competitors. And this is what your customers want. Family, not a big investment, very little change. Eco. All right, eco, not a lot of change, but there was a consumption change, which is consumption. They really wanted better gas mileage in low and this should be eco, right? Yeah, in eco. Eco, they care about gas mileage, but consumption is very, very expensive. So this is let's stay the same as we were given strategy of, like, let's not even move the sliders at all. Model numbers and novelty did a little bit better because of making decisions there. And finally, an image. Again, these a little bit change. What is this from 4 to 6 in everyone? These curves get bigger as you go along. So to make all the same changes in every one, as if everything they care about is the same in every line, that's just not understanding the strategy of what the customers want yet. More study in the cheat sheets, what do each one want. But this is how you learn also. You see the white line, you say, whoops, underinvestment all across. Where did we underinvest? Where did we overinvest? There's not a lot of overinvestment, maybe a little bit in size, but image is a key line. And this would be a lot more variable if everybody made changes in it, but you can get an idea that things like technology are important. Dealerships are not as important. So, if you have dealer proximity, and you went up a little, you could have gone down a little because they don't care about it in image. If you're in family, dealer proximity matters. So if you stayed, let me just stay the same at 4. You stay at the same at 4. Well, it's not gonna make any changes, but you can't differentiate or compete otherwise. If you don't differentiate, let's jump to the other two teams quickly. This is blue and low cost, and you can see it's very cool. You'll see both blue and yellow are very cool and low cost because they made distinctive choices on what they think these lines want. And this is really good curve following for a first decision. I mean, it's like, wait, what is this robustness? Yeah, we overinvested here for what they want, a little overinvested here. in terms of gas mileage. They don't need as much gas mileage, and consumption is very expensive EBIT wise. But look at the following of the form. It's very close to what they want. So somebody did some major studying. It's just that, like, see, let me find robustness here. This looks like an overinvestment. Yeah, to go as high, you might want to go 5 there. Well, what did they actually want? Let's look. All right, yeah, so they wanted 5 in robustness, and you went to 7. So you can look at these and see how you'll get to know these by heart really quickly after a couple of decisions, but um, it's fantastic in terms of following what the wants and needs are. It's just a matter of gauging, what do we want to do with each one of them. Marketing's nothing at this point. Let's go to family. Family again was not a lot of change and a little bit of overinvestment. Of course, this mimics what you're changing too because of the investment on all the teams. And you'll see this line's a lot flatter when everybody doesn't make a lot of decisions or make a commitment to the line, because it also follows if you sell a lot of something and you market a lot of something, there's going to be more demand for it, and it's going to be more of what, if you put more features in a car, you make it self-driving or lane maintain, more people are going to want lane maintain, even though that was an original demand. So that's very realistic. Let's look at eco. Um, well, we got some similar waviness there, but eco is where everybody kind of gets killed, but not as bad because at least we're trying here and we're not overinvesting. Now, what some people do in eco, this is very smart in a way early on, because what people do, and we'll look at our team leader in a second, but some people actually close the plant. Now, we don't do that usually in this sim, but some people really defeature a line like eco. Others say we're going to be the best there is in eco, and by decision 3 and 4, they take it over. But to shut down a plant, you basically don't sell a lot, you don't put a lot of money, and you don't make a lot. But you have to have employee morale, and you have to invest in depreciation, because you'll get a field failure rate, and it wasn't too high on anybody this time. But field failures in the sim come from having problems with a car and having to fix it in the plant. It's not an American model where you take it back to the dealership and they fix it. It goes back to the plant, so it cuts down on your productivity if you have field failures. All those cars have to return to the plant. So the way they've done that this way, it's more of a European model, but it does ding your production capability and incentivizes a little bit to be more eco-friendly and a little bit to be more higher quality. So let's look at image. And again, there's not, wow, design and image. This is great. There's, again, we kind of understanding where these are going. It's not following this. You're seeing what the demand is. And are these model numbers here? Model numbers are really big for image. That's great. Technology is huge. This, again, is a team who has done a lot of study on what did the customers want, not just let's go way up, way down, leave it the same. It's like, what do they actually want? You can see the profile, and you see that profile is changing. So bravo. Okay, let's look at our leader in terms of what we're doing with marketing and how well we matched. Um, this is low cost, which very, very rarely goes into positive EBIT, and you'll see why it did. We saw the loss over inventory were not bad, and now we can see the marketing side of it. This is a very mature decision profile. Someone really got and understood this line. And by the way, don't if you see something doing really bad and say, well, it's the person that had that car line, it's that person. That's not true at all, because if someone is got enough courage to take eco as a line, it could take the whole sim to turn it around. So they have a much more difficult task than image, who's a rock and roll or family. But this is fantastic performance on low cost. Not only does it match the curve, but it's really close. The only tiny thing is, what is this consumption here? Yeah, the only tiny thing is consumption. Where'd we go? We just basically stayed the same, and they wanted a little better gas mileage, but that's okay. You're preserving your EBIT by not over investing in that, and it's not that far off. So the rest of the curve is really, really close. Surprisingly for low cost, let alone eco. Family is dead on, not a lot of choice, not a lot of changes. Let's just stay the same. eco-friendly, same thing. So you can see what's wanted and where there's overinvestment by just leaving it the same in eco, not getting killed, but still losing because you have to you by leaving it the same, you don't have any more and any less, and you have to have some more and some less according to what they actually want in order to get your EBIT to work. Same thing here. So you can see this is one of the reasons yellow and red were also actually tied for revenue, is they stayed very much the same in a lot of the sliders, whereas blue took a chance and said, let's try to do a portfolio play on this. And all bets are off. Any team could do fantastic as closely as they are. Now, I'm going to just do a few snapshots here to take screenshots as we close out. Okay, we've got a shot of this. I've already posted on Halo. Here's low cost. You can see the financials. Red are where we had an issue, and blue are, wow, you're not doing too bad, right? That's low cost. Take a shot. There's family. Results in family. See what happened in revenue, and we have to look at, nothing is really off. Everyone did great in cash, which is surprising. Eco. You see the story here in Eco on EBIT. Image. Very close. In EBIT. And not too bad in row say. Some screenshots there. Snapshot of red corporate budget, including investment in a facility, which is very important. We have our cash management. Screenshots, anyone? Blue corporate. Screenshot. Screenshot. Facility investment. There's a formula for that in the slides. We'll put that up. And yellow corporate. Screenshots. I might say, wait a minute, this is too much information. We're seeing too much competitor. This is publicly traded. I'm not going to make everybody do the number crunching to back into what the other numbers are. This will help you with your decision to an extent. And that's it for decision one. Thank you for your time for looking at it. A lot of these things will be posted in Halo, especially in announcements. Announcements is a place to go for tips and hints, but also call or text if you have other issues. I'm here for you. And great job. It's a three-way tie with no information going in. Now there's a lot more information coming on out to take a look at our decisions. And I will also be posting more of the slides from the cheat sheet, but it's now we're off to the races because we know what our competitors are doing, what we have to do to make a strategy. Enough people left the sliders alone, but there's time now for differentiation. You can really invest in image or in family and try to build a revenue flywheel and use up some of that cash. Go down to zero or below, but the investors and the stock price will not like it if we keep it parked in cash, just like they don't want us buying Bitcoin. We want to put it into operating leverage, invest in our facilities, and build a flywheel in revenue and then in EBIT. Thank you for your time.